Good day, Matthew, and good day, everyone. I'm Robert Vallis, President, CEO, and Director of Signature Resources Ltd, Canadian gold exploration firm with our flagship asset in Northwestern Ontario. Steadily working towards unlocking our potential there, both locally through our drilling, the growth of our existing historical resource, as well as unlocking the massive potential in our sizable land package.
Brilliant. Good to see you again, Rob. We caught up with you at the end of September. I really like that story, actually, and I'd recommend people, we're not going to dig into the weeds as much as we did then. Go look at the link below, measure with the man, measure the company strategy, etc. I just want to catch up before the end of the year with you guys, because I quite like the way you were going about it. So seeing there's been 3 press releases out. Is it steady as she goes, drilling, geophysics? What's happening?
It is, Matthew. Since we last talked, it's been really continuing on a journey that I'd mentioned then that we had embarked on, which is restarting our drilling, positioned, with our own 100% owned drills, drilling 24/7, 365, fully stocked in terms of consumables. We know there's 4-6 month lead time delays on that. We've sidestepped all that risk. So now it's just head down, as you say, moving through these choppy waters and just consistently delivering results. And you've seen that over the last month and a half since we last spoke, perhaps with the steadily increasing and exciting news that's coming out.
Well, yeah, the headline that got me at 5.44 grams over 6 meters, including 17.2 over 1 meter. So that's the one I actually wanted to talk to you about. But you just said a few things that kind of interest me. You're drilling 24/7, 365, and you've kind of got, because we've been talking recently to companies about this whole kind of just-in-time movement, which was something that miners worked to before. But along comes COVID, along comes supply chain issues, and you got to work a different way, slightly more expensive, but you don't slow down, which could be even more expensive for you. So is that's working for you? When you say 365, do you mean 365?
Well, yes. We're in an environment, geographically where, the conditions swing. The wildfires in the summer, drought conditions, snowstorms and deep cold temperatures in the winter. But to be resilient enough and positioned in a way that you can persevere through those conditions and deliver results and be able to do that consistently throughout the year is what we've achieved and what we're focused on. It's about getting results, value-added results to our shareholders as rapidly as possible. It's consistently.
Yeah. It's kind of fascinating. Actually, we're talking about seasonality being a problem. One company this year would typically expect to be able to drill for 3 months of the year, but actually only managed 28 because of issues around being able to get drill contractors in place. So not just equipment and pieces of equipment, which you're going to need to keep things going, but getting teams to actually turn up when you pay them to turn up has been a problem. So it's been a sort of tricky, bizarre environment for you guys. Owning your own rigs has really helped you, I'm guessing.
It really has. You touched on the core of a lot of the issues with a lot of our peers. We saw that coming a mile away, well on the horizon. We understand the volatility that's out there. We understand the risk, and it's about mitigating that risk, at least for myself and our team and this company, so that we're able to be positioned to just continue to deliver the results that you've seen over the last several weeks. And that's what we intend to keep doing.
Good. Okay.
Through these conditions.
Good. No, I just don't make it. I want to discuss it because most people kind of skip over and gloss over and don't understand the realities. So I always say mining's tough and there'll be bumps along the road, but this year's been quite bizarre. And even when you think you've got things sorted, you don't necessarily have things sorted because the people you paid don't actually show up. Anyway, let's move on to these. I mentioned them, 5.44 grams over 6 meters, all good stuff. Are assay results delayed? Are we going to see more of these? I mean, how many more meters have you got yet to present?
We've got quite a bit in the hopper. There is delay conditions with the assay labs we're seeing upwards of 6 weeks, and it's a constant process that we work with to with the labs to work to shorten that as much as possible. And the best way to combat that has been what we're doing, which is consistently fill the pipe, so that, out the other end, we start to see consistent results coming out. And despite the conditions, as you point out, out there, the delays with the assay labs, we are expecting our next batch of drill results pretty soon, within the next week to 10 days.
Okay, so talk to me about Lingman Lake. I know we talked about it previously, but I just want to understand. Yeah, are you coming at it the same way? Have you, as the more you see, are you sort of changing and adapting and being a bit agile about the plan, or is it again just coming back to the steady as you go approach?
Well, it's all steady as you go, but our approach tactically on the ground at Lingman Lake, and there's two sides of the coin, of course, Lingman Lake and then our massive land package and unlocking that valley. To your question, at Lingman Lake, per the press release that we put out in early November, indicating, actually it was mid-October when we began to first demonstrate that 6 new targets that have been identified through that ground-based geophysics that we've been doing, as well as crawling through the plethora of historic data we have, that led to another press release in early November, indicating that we know the mineralization where we are now continues upwards of 500 or 600 meters to the east. But what we're doing really is we've recognized that the footprint of this system, the mineralized system, is far larger than what we have right now. So tactically, yes, we're drilling beneath what we have and what I've been talking about to this point, extending that mineralization from the known. But now that we've completed those all-important geophysical surveys that look down 500 meters depth and cover our entire property, and of course the results that come out of that revealed several very high potential targets. It means that we're adjusting our course as time progresses, as our drilling progresses, to begin to look at and test these other areas as well for new target zones. Certainly, if we're able to demonstrate and pick up additional mineralized zones, then that underpins the strength and scale of this mineral system, and it acts as a multiplier to us being able to grow the ounces in a much more rapid way. But scale is certainly something that's important to us to demonstrate, and that's how we're dividing and working.
It's kind of interesting actually to me, Rob, because especially when precious metals have been under a bit of pressure, equities have been under pressure this year, right? In the sense that people have got distracted and are off looking at other things. I think next year I get the sense that things will be different. But you've had to operate in a very constricted environment in that sense. So you going and doing your geophysics and your LiDAR surveys and identifying targets, etc., is kind of all well and good, but those words don't kind of set the retail investors world alight. But it is the systematic approach to going about, and I'm trying to understand, unlocking the scale and potential of your land package, right? Were you not tempted at any stage during this kind of quite downward cycle to go for those big headlines, those high grade intervals like you put out at the end of October there, just to get people to pay attention in this current environment, knowing that at some point you could go back to more systematic approach to it?
Well, yes, we definitely are. That is why we're drilling where we're drilling, which is beneath the known, where we know the mineralization continues. The plethora of high-grade plunge corridors that we've identified that you see in our verified presentation online, those are the areas that we're focused on to bring those results forward. But at the same time, we're driven by the data, Matthew, and we're not doing this with blinders on. We're doing it so in a way that we're drilling where we know we're going to get the best bang for our buck, to demonstrate not only, as you say, where the rich zones are and that it is continuing, but also to move where the data is telling us to drill. Certainly with the data we've collected, that's meant to vector our drilling, to tell us where we should be drilling. there's a lot of indications there. There's a lot of other areas that appear to be equally, if not more, interesting than where we are drilling. So it's just striking the balance there. But certainly, the underpinning that is using the data to drive these decisions. If we were to just, blindly drill and expect to be adding ounces, it's a fool's game.
Yeah, of course. Like, no, I totally get that. But you got 2 drills, wholly owned drills. You had a 10,000 meter program. I'm not quite sure how much of that is back out in the market. Well, how many meters have you actually been able to?
It's been slower. We've throttled back. We're not drilling with both of our drills flat out now. We've throttled back a bit. Half of that preserving capital, the other half of just making sure that we're drilling, as you indicated, where we're expecting to get the biggest bang for our buck. And so out of that, we're probably about 30% through the 10,000 meters. So it's moving slower than we would have liked. But as you pointed out earlier, the conditions are really dictating.
Well, that's the point here. Like, I want people who are adaptive. I want people who are agile and change things around, because the road is never straight. There'll be a few wiggles along the way, and that's fine if there's an idea behind it. If it's like, hey, the market sucks at the moment, big expectation from brokers, promoters, fund, everyone that gold will be pushed out of the market next year. I'm hearing that a lot for sure. Then let's just wait for that moment in time. Let's not spend more money than we need to here. But I'm wondering how it affects the amount that you do spend. So, do you drill as deep? Do you, what are the step outs, that you utilize? Things like that, which, do provide data to inform the next decision, clearly, as you're saying, but enough to target exciting targets, which are, provide you the headlines you need. 5.4, 5.5 over 6 minutes. That's quite nice. I quite like that. Do you need to put more of those announcements out, even though they don't necessarily fit into the sequence that you had imagined 6 months ago or 3 months ago? That's what I'm getting at. I'm just trying to understand the thought process here.
You said the word, it's adaptability. We've positioned ourselves so that we're able to adapt and pivot on a dime. As I said, to throttle up, throttle back. We're using both drills, just leapfrogging them from setup to setup. So, we have zero downtime in between drill holes. But, from a meterage perspective, we're balancing, as I said, our capabilities and the conditions. And as you point out, and as I've stated, that is a dance. It's a balance between targeting where the mineralization is, extending that, but also when you've got new data screaming at you to drill here in other areas, but they may be shorter holes, less deep holes. That's exactly what we're doing. We're adapting and moving and adjusting where and what we're drilling, so that we're getting what we believe is the maximum impact from that. With the least amount of wasted effort.
Right. Okay. Get it. I want to talk to you about warrants. We talked about it last time round. You're pretty much where you were last time we spoke in terms of share price. Sorry, you're pretty much where you were last time we spoke. So has your position on that changed, or have you got a view as to what you're going to do or how you're going to time that?
Well, you're referring to warrants,
yep.
Right? Yeah, I mean, we have some warrants expiring, quite a bit expiring in early December, and that's certainly, I expect to add buoyancy to the stock as well. In addition to the fundamentals we've been speaking of, that's driving the results you see that's coming out and are continuing to move through the pipe. That is a condition that we have to move through. It's what I inherited coming in here, but as I said, it's been all about risk management and positioning. So I think the timing of that bodes actually quite well. We're on the cusp of seeing a more optimistic swing in the gold market coming into the new year that you pointed out. I think seeing several of these warrants come off our books is an opportunity for us to demonstrate financial positioning as well as exploration and execution position.
Okay, so you're not seeing them as an overhang.
I do see it as an overhang, and it has been, I think, leading up into the early December. There's certainly games that are played, I'm sure, with stocks keeping prices down, and I think that's been at least in part factors to why we are where we are, aside from the choppy waters we spoke of earlier. So yeah, it is, and I don't perceive it as much as an overhang as some others do, but nevertheless, it's there, and it's not ideal. Recognize that, and so I think, however you want to analyze it, at the end of the day, having less warrants to work with, I think, is a positive thing for Signature and its shareholders.
Okay. Well, let's see how that plays out. Okay. You are going to need to go and maybe top up the coffers a little bit, just keep things moving over to a point in the new year where things do start to move again. And it's a big if. There's lots of expectation. Like I said, lots of conversation that we've had and lots of people have had about what may be. And you can only plan with what you know today. So can we expect you to, come to the market in the new year or sooner?
I think for sure in the new year, we'll be assessing that quite specifically and have a plan to do that. Whether we look at something before then, that's something we assess as well in terms of, what we already discussed, which is the exploration of the warrants. I think will be a big catalyst for reassessing that. In conjunction with the demand that's there for third-party flow-through deals and these sorts of things. So it's really just balancing that against, and of course, observing our stock price and where that is. We don't want to be, doing deals that just don't make sense, at the end of the day. But at the same time, it's balancing the momentum we have, our positioning, so that we're able to move smoothly into the new year and through the early parts of the new year to look to add even more fuel to the tanks.
Beautiful. Look, Rob, thanks for picking up the phone. Really good to catch up with you and see what you're doing. It's more of the same. Drill. That side of things you can control. We'll see what happens with warrants, fundraising, etc., and what next year looks like. Stay in touch. Good story. Want to keep on top of this one. Thank you.
Thank you, Matthew. Have a great end of the year. Cheers.